Ladies and gentlemen, welcome to this week's version of Nickels and Dimes, our weekly video series. The quote of the week this week comes from Investopedia that talks about melt-ups. Melt-ups. So what is a melt-up? A melt-up is a sustained and often unexpected improvement in the investment performance of an asset or asset class, driven partly by a stampede of investors who don't want to miss out on its rise, rather than by fundamental improvements in the economy. So folks who do not want to miss out on an asset class's rise. Well, over the last few days, we've seen the market shake off a lot of bad news, and in particular, rising interest rates. So I wanted to reference an article that was published by Yahoo Finance. Check this out. Equity funds have attracted more than $500 billion in the last 5 months, exceeding inflows recorded over the last 12 years. This is reported by Bank of America through Yahoo Finance. So think about that. Over the last 5 months, there's more money that has flowed into stock funds than over the last 12 years. That is crazy. So in specifically, what does that mean in terms of actual dollars? A record $576 billion has flown into equity funds since November, more than the $452 billion that has been seen in the last 12 years. I mean, that is incredible. So there's a lot of concern about a melt-up in the market. So, whether that's true or not, or whether we're near the end of this bull market run, obviously we'll see. Time will tell. So my message to you is this: if you are getting in the equity markets right now, there's a reasonable chance we're in the late innings of this bull market run. And I bring this up because you got to make sure you are doing something called risk management. So managing the risk of your portfolio is key. Now, how do you do that? You can dollar cost average, which is buying in over time. Maybe you do something called put options. So those are contracts that can hedge the portfolio if the market starts going south. Maybe it's a traditional asset allocation portfolio. So there's a myriad of things you could do to make sure you're protecting yourself. Again, making sure you're addressing risk management, which is one of the keys to investment management, especially over the long term. So do not lose sight of that. So again, I shared with you some recent information that I think was very telling. So again, are we in the last stages of this bull market run? A lot of evidence suggests we are. So if we are going to head south, make sure you have risk management, whether it's, again, traditional asset allocation or options contracts, or even, again, dollar cost averaging in. So if you would like a second opinion on your portfolio or financial situation, you could send me an email, cnichols@nicholswealth.com, to get that second opinion, of course, or you can go on our website at nicholswealth.com to learn more about our services. Thank you again for watching, and until next time, have a good day.